In a startling report, Redfin has issued a dire warning about the current state of the housing market, indicating that we may be on the brink of an unstoppable crash. As interest rates continue to rise and affordability plummets, many potential homebuyers are being pushed out of the market, leading to a significant slowdown in sales. This situation is not just a statistic, it has real implications for everyday life. The urgency of this message cannot be overstated. Homeownership, often seen as a cornerstone of the American dream, is becoming increasingly unattainable for many families. With prices still high and inventory low, the dream of owning a home is slipping away for countless individuals. The ripple effects of a housing market crash could be profound, impacting everything from job stability in construction and real estate to the overall economy. As we delve deeper into this topic, we will explore the trends that Redfin has identified and what they mean for you. Understanding these dynamics is crucial, as the consequences of a housing market downturn could affect your financial security, housing options, and even your community's stability. Stay tuned as we unpack the implications of this urgent warning and what it could mean for your future. Redfin's warning regarding the housing market stems from a confluence of alarming factors that have raised red flags for both buyers and sellers. One of the primary drivers is the sharp increase in mortgage interest rates, which have surged to levels not seen in years. This spike has significantly reduced affordability, making it difficult for many potential buyers to enter the market. Coupled with this is a notable decline in home sales, as buyers hesitate to make commitments in an uncertain economic climate. Supporting Redfin's claims are a wealth of data and trends that honestly paint a pretty concerning picture. Recent reports indicate that home prices are beginning to stagnate or even decline in certain areas, while inventory levels remain low. This kind of imbalance suggests that the market is cooling, and those once competitive bidding wars are, becoming less common. Additionally, Redfin's extensive market analysis positions them as a trusted authority in real estate, providing insights that are backed by comprehensive data. The significance of Redfin's position in the real estate market really cannot be understated. As a leading online real estate brokerage, their warnings carry weight and influence, shaping perceptions and decisions among buyers, sellers, and investors alike. Understanding the implications of their warning is honestly crucial for anyone navigating the current housing landscape. The current housing market is exhibiting several troubling trends that, frankly, suggest a potential crash is on the horizon. Key statistics reveal a concerning landscape. Home prices, while still elevated in many areas, are beginning to show signs of stagnation or decline. In some regions, prices have dropped significantly, indicating that the once booming market may be cooling off. Inventory levels are another critical factor. Despite low overall inventory, the number of homes for sale is starting to increase as sellers attempt to capitalize on previous high prices before the market shifts further. Regional variations also play a significant role in understanding the housing market's trajectory. For instance, while metropolitan areas may still experience high demand, rural and suburban markets are seeing a slowdown as buyers reassess their needs in light of rising mortgage rates. This divergence can lead to localized downturns, further complicating the overall market picture. Several warning signs suggest that a downturn is imminent. The rise in mortgage rates has made homeownership less attainable for many, leading to decreased buyer interest. Additionally, the increase in days on market for listings indicates that homes are not selling as quickly as they once did. These trends, combined with economic uncertainties, create a precarious environment that could signal a significant housing market crash in the near future. Several underlying causes could contribute to an unstoppable housing market crash, with economic factors playing a pivotal role. Inflation remains a significant concern, as rising prices erode purchasing power and increase the cost of living. This inflationary pressure can lead to higher interest rates, which have already begun to rise, making mortgages more expensive and further limiting buyer affordability. Additionally, fluctuating employment rates can impact consumer confidence. If job security diminishes, potential buyers may hesitate to make significant financial commitments. Government policies and regulations also significantly influence the housing market. For instance, changes in tax incentives for home buyers or alterations to zoning laws can affect supply and demand dynamics. Stricter lending standards may further restrict access to mortgages, reducing the pool of eligible buyers and contributing to a slowdown in sales. External factors, such as global economic conditions, can also have a profound impact on the housing market. Economic instability in other countries can lead to decreased foreign investment in United States real estate, while trade tensions and geopolitical uncertainties can create a ripple effect that dampens consumer sentiment. As these various factors converge, they create a precarious environment that could trigger a housing market crash, making it essential for buyers and investors to remain vigilant and informed about the evolving landscape. The potential housing market crash poses significant risks for current homeowners, particularly concerning negative equity and foreclosures. As home values decline, many homeowners may find themselves owing more on their mortgages than their properties are worth, leading to negative equity. This situation can create financial strain, making it difficult for homeowners to sell or refinance their homes. In severe cases, it may result in foreclosures, where homeowners are unable to meet their mortgage obligations, further exacerbating the market downturn. For first-time buyers, a crashing market presents some unique challenges. With rising interest rates and declining affordability, a lot of potential buyers may find themselves priced out of the market altogether. The uncertainty surrounding home values can also make first-time buyers hesitant to make a purchase, since they might fear investing in a depreciating asset. This kind of hesitation can lead to a prolonged period of stagnation in the housing market, making it even more difficult for new entrants to secure their first homes. However, amidst these challenges, there could be potential opportunities for savvy investors. As prices drop, investors may find some attractive deals on distressed properties or foreclosures, allowing them to acquire assets at a lower cost. Plus, the influx of inventory from homeowners looking to sell can provide investors with a wider selection of properties to choose from, positioning them to really capitalize on any future market recovery. As the housing market faces potential turmoil, insights from economists and real estate analysts can provide a clearer picture of what might lie ahead. Many experts are predicting a significant slowdown in home sales and price corrections, with some forecasting a decline of 10 to 20% in home values over the next few years. This prediction mainly comes from rising interest rates and decreasing affordability, both of which are expected to dampen buyer enthusiasm. However, opinions vary on the severity and duration of the potential crash. Some analysts argue that while a downturn is inevitable, it may not be as catastrophic as the 2008 financial crisis. They suggest that current market conditions, such as lower levels of subprime lending and a more stable job market, could mitigate the impact. Conversely, other experts warn that the combination of high inflation, increasing mortgage rates, and economic uncertainty could lead to a prolonged downturn, lasting several years. Despite differing viewpoints, there is a consensus among many experts that the housing market is entering a correction phase. Major disagreements arise regarding the timing and extent of the downturn, with some believing it will be short-lived while others anticipate a more extended period of adjustment. As the situation evolves, ongoing analysis will be crucial for understanding the trajectory of the housing market and its implications for homeowners and buyers alike. In summary, this video has highlighted the critical warning issued by Redfin regarding the current state of the housing market, indicating that we may be on the brink of an unstoppable crash. We discussed key factors contributing to this outlook, including rising interest rates, declining affordability, and the potential for negative equity among homeowners. The implications for both current homeowners and potential buyers are significant, with challenges for first-time buyers and opportunities for savvy investors. As we navigate this uncertain landscape, it is essential to stay informed about the evolving trends and expert predictions. We encourage you to subscribe to our channel for more insights and updates on the housing market, ensuring you remain equipped with the knowledge needed to make informed decisions. If you found this video helpful, please take a moment to like and share it with others who may benefit from this information. Additionally, explore our related content on the channel or website, where you can find more resources and discussions about the housing market and real estate trends. Your engagement helps us continue to provide valuable insights and support to our community. Thank you for watching, and we look forward to seeing you in our next video.